Hey, what's up, guys? Brian Horton with BK Forex Academy, and we're here to talk about currency pairs. There's a lot of new traders who don't quite understand currency pairs, and this is how we actually get paid as Forex traders. So it's very imperative. There's also tenured Forex traders who don't quite understand the technicalities of currency pairs, and so they normally just put in trades, buys, and sells. Really understanding how we're getting paid by using these currency pairs and understanding what's going on will really change the game of your trading. So I advise you guys to take a look at it, sit back, relax, understand it. And before we go ahead and start, I want you to hit that like button and subscribe if you haven't already. Join our Telegram, which is free. We give free trade ideas, information tips, and then also join our Instagram. We love to see how you're doing and just to share our lifestyle with you guys right after this. All right, guys, so if you look at the right side of my chart here, you'll see a list of currency pairs. All right, so you'll see AUD, CAD, AUD, CHF, AUD, JPY, so on and so forth. So I'm going to put a link in the description, the list of these names here for these symbols so you can easily understand it. And then also I'll put some of it here up on the screen for you right here just for reference. But just really quick, AUD stands for the Australian dollar. CAD stands for the Canadian dollar, right? And then you'll see this number here on the right is 0.9292. So let's look at the whiteboard and break it down and see how that works. All right, guys, so we had the AUD on the right and then AUD on the left and CAD on the right. Australian dollar and the Canadian dollar. You'll always see two in one. You'll never see one currency. So the one on the left is always considered the base. That is considered the base. Now, this is something you really don't quite have to know, but I'm showing you this for the fundamentals so you can have a thorough understanding of what's going on during these currencies, right? So on the right, on the left, you'll always see it's considered the base. On the right, this is considered the quote of the pair. Okay, now the base is always valued at 1. So whatever currency is on the left side is considered 1. So in this case, we have 1 Australian dollar. And on the right is always considered the quote. So if you look back on the symbol here, we have that 0.9293. And I'm going to just put that right here. So 0.9293. That simply means that for every 1 Australian dollar is 0.9293 of Canadian dollar. So for simple terms, $1 of Australian dollar is equal to about 92 cents of Canadian dollar, almost 93 if we were to round it up, this 9 here. Okay, so that's really imperative of understanding how this works and how we get paid, right? So how we get paid as day traders is that we rely on the fluctuation of these two currencies, right? So since we're looking at the AUD CAD chart, we understand that the number or the quote belongs to the Canadian dollar, right? So every 92 cents equals 1 Australian dollar. So all that means is that, hey, if I was in Canada and I had 92 cents or 93 cents and I wanted to take a trip to Australia, they would give me $1 in exchange. So that's the difference between those currency pairs. And so this number here is based on the strength of the economy for Canada and a whole bunch of other things, right? So since we're looking at the Australian chart, this is always considered 1. So all we're doing is comparing this to this side here. So let's look at that chart to better understand it. So now we're on the Australian dollar and the Canadian dollar chart that we just mentioned, right? Okay, so if I go ahead and look to the right here, it looks like current price is around 0.92943. So that price moves. As you can see, it moves. As the market moves between those two currencies, this is the difference between those two currencies, right? So if I wanted to go ahead and trade it, and let's say I wanted to buy, I will be buying at this price. And as it fluctuates, between the two, I make money or lose money depending on how I trade, right? So as this price goes up, I'm not, and let's say this moves from 0.92 to 0.93, that's only 1 cent difference, but I'm not making that cent. It all depends on how much I'm trading will determine how much I get. So even though it moves 1 cent, I'm not making that 1 cent. I can make $1,000 depending on my lot size, which is a completely different video. But this is all about currencies and understanding the pair between the two. So let's go ahead and look at another demonstration of this. All right, so now we're gonna look at, let's say, GBP USD. Now this is a popular pair with Forex here. All right, let's take a closer look. So GBP USD stands for the Great Britain pound versus the United States dollar, and is currently trading at 1.3768. Now, all you do typically is look at these first three numbers, which means $1.37. Okay, so that means for every one Great Britain pound, remember that's the base, it's always valued at 1, because we're only looking at these two currencies. So every one Great Britain pound equals $1.37 a United States dollar. So if I was in the United States and I had $1.37 in my pocket and I wanted to go to Britain, they will give me $1, because every single thing on the left equals 1 when it's compared to the second currency, right? Or and vice versa. If I was in Britain, I had $1 and went to the United States, they will give me $1.37 in exchange. And we can look at that here by just going to Google, and let's just say GBP USD. A quick Google search and it'll say it is at $1.38 United States cents, right? So if we go back, GBP USD $1.37, but if you look at this fourth digit here and you round it up, it's considered 138. Okay, that's how we're trading. That's how we make money. We rely on the market going up and down, and the way we trade depends on how we make that money and how much money we make. So let's go to the whiteboard and kind of dissect that a bit so you guys can really understand and get this down packed. Well, let's look at GBP again. So I'm going to put GBP here, USD. We already know that's Great Britain pound, United States dollar. All right, this is our base. The base is always valued at 1. So that means I'm looking at 1 Great Britain pound, and the quote is always valued at the quote that is given. So if we look back here to the right at GBP USD, it is at 1.37. We round up to 6, so 1.38. So that means that it's $1.38 of United States dollar versus 1 Great Britain pound. Okay, so we'll just go ahead and put that here. So we're going to put 1.38, and that's how you read a chart. It's very easy how to read the chart, right? So as the price moves, and let's say this goes to $1.39, as I referred to before, we're not making that 1 penny as price rise if we were to buy. We're making money based on how we put our lot size in and a whole bunch of other things. All we doing are trading the currencies, or the difference in currencies between the base and the quote, and we're comparing the two. So this should tell you that the Great Britain pound is stronger currently than the United States dollar. Why is it stronger? Some people may say, well, it's only $1. How is that stronger? It is because it takes more United States dollar for 1 pound. So whenever I have to give you more of something and you give me less of something, that means this is stronger. Okay, so the economy or the currency is stronger in Britain than it is in the United States, according to today's chart. This is pretty much a basis of the currency and how it works. So I would like for you guys just to pick one currency currently and tell me what the base is and the quote is in the description, and we'll take a look at it. We're pretty good at responding. So if you put it in the same day, we'll respond to you the same day and take a look at the currency and say, hey, you're right, this is what it is, or no, you're not right, this is what it should be. Because we're really here to help you guys thoroughly understand And a lot of people probably know this stuff already, but then believe it or not, there's a lot of traders who've been trading for a while and don't even know the basics, which is highly important when trading. When you're trading, you're taking it serious as a business. You should know the ins and outs of your profession. So guys, this concludes our video. I hope you guys learned a lot. Again, go ahead and click the description for our free Telegram. Go ahead and join it. We drop lots of things in there. Join our Instagram because we love to show our family, our lifestyle. We love to share that with you guys and our trading as well. And we'll see you in the next video.